Drake has $10,000 in his savings account. He's been saving for 2 years, and he keeps checking the balance, wondering why it barely moves. Daniel also has $10,000 in a savings account. After 1 year, he's earned over $400 in interest just by picking the right account. In this video, we're going to show you exactly what Drake is doing wrong, why most people's savings accounts are silently eating their money, and what you can do about it today in about 5 minutes. The FDIC tracks savings account rates across all U.S. banks. As of mid-2026, the national average savings account interest rate is 0.38% AP. That means if you have $10,000 sitting in a typical bank savings account, you're earning about $38 per year. Meanwhile, inflation over the past several years has averaged between 3 and 4%. Even in a lower inflation environment, you need your savings to grow fast enough to at least keep pace with prices. A 0.38% return does not do that. Wait, I made $38 on $10,000? In a whole year? That's right. And while Drake's money sat there earning almost nothing, the best high-yield savings accounts were offering up to 5% AP. That's the difference between $38 and $500 on the same $10,000. The gap exists because big traditional banks, the ones with the most branches, have massive overhead costs. They don't need to compete for deposits the same way smaller online banks do. So they offer you a low rate, and most people just accept it because switching feels complicated. A high-yield savings account, or HYSA, is exactly the same product as a regular savings account. With one difference, it pays significantly more interest. Your money is just as safe. Most HYSAs are offered by FDIC-insured banks, which means your deposits are protected up to $250,000 per depositor, per bank. You've seen this before. We covered FDIC insurance in our last video. Most HYSAs are online-only accounts, no physical branches. That's how they keep costs low and pass the savings to you in the form of higher interest rates. You still get a debit card or routing number, online transfers are instant, and deposits work just like any other bank account. I opened mine in about 10 minutes. No fees, no minimum balance, no gimmicks, just better interest. One thing to know, HYSA rates are variable. They move with the federal funds rate set by the Federal Reserve. As of June 2026, the Fed has held that rate steady at a target of 3.5 to 3.75%. That's why HYSA rates are still relatively high. The top accounts are paying up to 5% AP as of this video. Here are some of the most well-known HYSA options as of mid-2026. Rates change, so always verify the current rate before opening. Think of these as starting points, not permanent rankings. Ally Bank has been one of the most popular HYSAs for years. No minimum balance, no monthly fees, easy mobile app. Marcus by Goldman Sachs, no fees, no minimum, and they've consistently offered rates near the top of the market. SoFi offers a competitive HYSA rate and pairs it with perks like early direct deposit access. Axos Bank has offered rates around 4% AP in mid-2026, known for low fees and a solid mobile experience. If you already invest with Fidelity, their money market funds are worth considering for cash you'd put in a HYSA. They often yield similarly to top HSAs and keep everything in one place. I'm not attached to any one provider. I compare rates every 6 months and move if I can get meaningfully more somewhere else. It takes 20 minutes. Drake has had the same savings account since college. He opened it at a big national bank because it was convenient. He gets paper statements with 0.01% AP printed on them. I assumed all savings accounts were the same. Nobody told me there was a difference. This is one of the most common and most expensive financial mistakes people make without realizing it. Not because of bad intentions, just because banks benefit from you not switching, and they're not in a hurry to inform you about better options. Let's run the numbers over 10 years on $10,000 saved, with no additional deposits. At 0.38% AP, you end up with about $10,388. At 4.5% AP, you end up with about $15,530. That's over $5,000 of difference for the exact same effort. The only variable is which account you picked. When comparing HYSAs, here's what to look at. Number 1, the current AP. This is the rate you'll actually earn, compounded annually. Number 2, fees. Avoid accounts with monthly maintenance fees. Good HYSAs have none. Number 3. Minimum balance requirements. Top HYSAs require no minimum or a very low one. Number 4. FDIC or ENQA insurance. Confirm before depositing. Number 5. Access and transfer speed. Most HYSAs allow free ACH transfers in 1 to 2 business days. Let's recap. Your regular savings account is probably paying you less than 0.5%. The national average is 0.38%. Inflation is running higher than that, so your purchasing power is declining. High-yield savings accounts pay up to 5% AP, the same safety and insurance as a normal bank account, but with a dramatically better return on your idle cash. Opening one takes about 10 minutes. There are no fees, no minimums, and no tricks. You're not locked in. And the difference over 10 years is thousands of dollars on the same savings. The only thing standing between you and that difference is inertia. This video is for educational purposes only and is not personalized financial advice. If this helped you, subscribe. We post a new personal finance video every single day. Next, watch our video on the national debt and what it actually means for your wallet, because that one affects every dollar you save, and it pairs perfectly with what you just learned.